Hello and welcome to Leviathan News. Today is June 15th, and we have on some special guests, the Silo team. We have Tenzin and
Aham, welcome.
Aham, welcome.
Thank you, guys. Glad to be here.
So we're here to talk about Curve, and I know you guys came in with probably some different ideas of what you're talking about today, but we're going to start with the man of the hour, Michael, who we talked about yesterday, became the main character in DeFi yesterday and crypto Twitter, or one of them really. And because he deposited a huge amount of CRV into his Curve position on Aave, and it got everybody in a tizzy because they were like, at 37 cents, we're all going to die. Curve is going to go to zero. There's literally not enough liquidity to absorb all of his supply, and it's just going to screw everything up. So I think we'll spend another minute or two covering this, and we can talk in about like the risks of this. So there's quite some systemic risks here, and I think Rex, you wanted to get into that.
Well, yeah, sure. I mean, I think that from my perspective, the people like okay, we've been talking about this for like 4 days now, right? Yes. And even more like in private. And so like my opinion has like definitely coalesced. And I think that like Michael, like continue to do whatever you want. Consider working on like your PR and your story. But honestly, like if you don't care, like, okay. Curve if like Curve is a protocol, and like for us who care about it as like infrastructure, this is like entirely irrelevant. And so like Curve is a protocol, like whatever. I think that the people that actually incurred massive risks here are the combination of Aave, Frax, and Abracadabra, who have issued all of these loans. And if something goes bad,
so hold on. When Frax only has 100K of exposure here, so it's.
What do you mean? Isn't there $20 million of CRV in there?
That's true, but it's not protocol issued. It's from other people who have decided to lend.
It doesn't matter whose it is. What matters is if the liquidation happens, that who's going to be stuck with a bad debt.
Exactly.
And
yeah.
So like the people taking risks here, to be clear, are only Curve holders. I guess I don't even know if that counts, but like the protocols that have issued this debt, which Silo guys, I'd love for you to comment on, and Convex. And that is because like Convex has this like very particular structure where the value of Convex is based on the value of CRV. But like, I just want to put Convex aside because it's like so complicated and specific to crypto. Like when you look at this situation, Michael, like you're taking some risks with your net wealth, and like it might go your net worth, and it might go down. But like otherwise, like the only people that should be worried are Aave, Frax, and Abra.
Yeah, they're the people issuing the loans.
So Silo, would you guys like please weigh in on like what this means? How do you guys look at this situation like holistically as it stands? And like what do you think as like designers of lending protocols like should be done? And ultimately like what's a steady end state from this?
Right. You know, I think there are a couple of things here. I don't think there's any risk for Convex users or really because actually probably they would want some users would want Curve to go down so you can buy it, so you can scoop it. It's cheaper, right? It's
great.
actually
I'll take
a great
that.
way.
Even less risk.
Right? Yeah, exactly. And then probably will have like increased their weight in the system, in the ecosystem. But as far as lending, so here's the biggest problem. If I have Curve, if I'm Michael, and I'm looking for USDC user to lend me their money, and I'm willing to pay them, let's say in a peer-to-peer setting, let's say that existed today, I would say like, hey, I'll pay you 5% APR, variable, let's say, no problem. Just give me $20 million, right? That's the ideal situation. So this is a marketplace. You're connecting a user with another, right? Right now, obviously, the other user is the protocol, is Aave or Fraxland or MIM or Abracadabra in this case. Okay, here's a problem. In shared pool model, what Aave V2 is, the issue is yes, you're connecting Curve user with USDC user, but that creates systemic risk for everyone in Aave V2, even if you have not lent any USDC. If I'm an ETH depositor in Aave V2, I'm exposed. If I'm a BTC user depositor, I'm same thing for USDT, whatever. Now, obviously, the risk comes from Michael himself keep adding more and more curve and making the problem bigger, which that's why they propose to decrease the LTV. So the bigger problem in DeFi, how can I create this marketplace where you can connect these two users without creating systemic risk? And this is what Silo does, because I'm not really trying to shield Silo here, but it's basically any actually 2-asset or 3-asset lending market, an isolated market. Yes, bring the USDC user, or in this case, ZA user or ETH user, bring Michael, put them in one isolated market and let them deal with it. If the USDC user thinks, well, Michael has become kind of closer to getting liquidated, well, the interest rate model plays a bigger role, because, well, then the higher APR and then Michael will have to repay, right? And this is how it works. But in Aave, because it's a bigger pool of USDC, it will take a lot more of utilization of USDC for the rate to go super high for Michael to be encouraged to repay, right? So that's kind of like what it is. So that's really what it is. It's a bigger problem, yes, right now. I honestly think it's kind of like there's a lot of theatrics to it, though. It's, first of all, his position is not bad. He's maintaining the position, so he's paying attention. It's not like an abandoned position, and he's gonna get liquidated. The number one, and I think Aave, of course, has the right to do it, and that's the protecting the protocol. But I think it's probably overplayed by users who wanted to benefit from shorting Curve and making some bugs, because simply there isn't any risk in the last incident that happened with the Eisenberg or Aave coming in and trying to short. There were two different things. Number one, charges were not brought against it. So right now we have a precedent. So people will start thinking before they can manipulate. The second one, which is more important, he could borrow Curve to short it, and that is usually the catalyst of an attack. Right now, it's not possible. So why are we probably like overplaying this? But yes, the problem is exposes the traditional lending markets. Design of traditional. Yeah.
The shorters are paying a very high price for the attack, right? I saw it's like 200% in Binance right now.
Yes. Yeah, that would be localized. And also, I'm looking at the other markets. You're essentially Michael's paying 25% interest on his loan right now in Frax, and we'll go check out Aave as well. But I'm sure it's high as people are trying to pull liquidity back. Push that up.
Yeah. I think it will be a little bit difficult. I'm not sure what he's paying on Aave, because I think that's probably much lower, because that's a way bigger pool.
Yeah.
Of USDC, right?
It is significantly lower, yeah.
And he's only paying 3.78%, which doesn't seem right for how much risk there is actually to the pool.
Yeah, and that's a major problem, that it's like, USDC depositors can't discriminate against certain collaterals. So they are kind of fully at the mercy of Aave governance, and to an extent just to the entire shared pool system design. I think, we kind of just started to see it, but they delisted a bunch of different assets prior to this a little while back, right? And just thinking about how, like, Curve, it would be like the most liquid asset out of the ones that they delisted. So, I mean, thinking about what a huge disaster that could have been, I see the concern from Aave, but also Mitch is an incredibly good force, I would say, in this space for the most part. I don't think Mitch is trying to, make an exit here, like some people are playing at. And also, I see a lot of claims on crypto Twitter and whatnot of like, this is how much on-chain liquidity there is. And yes, that matters a lot. But for Aave and Curve, there is some caveat here, because there is a ton of off-chain liquidity for Curve. So it's not necessarily like it's going to murder price. And I think you might even find worthwhile buyers directly through the liquidations at that price.
Absolutely. I think this claim that you can only liquidate 5 million at 10% price impact. I think they don't. There's a lot of alleys in those like private funds, probably placing orders, probably will scoop it cheaper because number one, Curve is
a money making machine.
Exactly.
Yeah,
So,
and the lower the price that CRV goes, the higher that your APR goes. And what is it right now? It's pretty high. Like I think it's 4% already right now. So if it were to decline down to its liquidation point, already you're getting 10% on your CRV, which seems pretty incredible for where you think Curve is going.
I think it's just an attempt for large probably funds or users who are very bullish, and I'm one of the bullish people on Curve, to an attempt to just buy it cheaper, and they have achieved that.
Yeah, and I think it's even like grosser than that. I think like when things are this grim, like it's like human nature for things to fall out of positive sum and into like dog eat dog and like kill or be killed. And I think that like there's no liquidity left, and some people are realizing that like, I don't know, like let's give this loan a shot.
Yeah. I think the biggest issue here that I can see is just that the rate that Mitch is paying is not like relative.
It doesn't match the risk.
Exactly. It doesn't match the risk, right? And if you look at like a different market, like the Frax Finance pool, you'll see that it has a very different risk profile, right? He's paying like 25%, or sorry, he's paying 25.9%, which is probably like more in line where he should be on.
Well, it's one direction. I'm not sure you can deposit Frax. Honestly speaking, if users could deposit Frax, and Frax doesn't work that way. It's pretty much like abracadabra. But if users,
Frax uses isolated lending pools, so you can only deposit CRV you can only deposit CRV and you can only borrow Frax.
Right. And I think Frax comes from the team, if I'm not mistaken, or whatever mechanism. But if that was an open market, two-sided, you would probably see a lot of users depositing Frax because of the 25%. Obviously, will go down, but
I can deposit Frax into this pool. That's where the liquidity comes from.
Yes, that's correct. Well, the majority of the liquidity is coming from the Frax.
No, that's not true. No, only $100,000 is. The rest is just user deposited. Yeah.
Right. So why we're not seeing? So it's interesting actually. Then in this case, why aren't we seeing more deposits? Because that's like a way higher. If I'm a USDT user, probably I would exchange it for Curve and deposit for Frax and deposit it. Making good money. Yeah.
It's probably
we'd be helping Michael as well. We'd be helping Michael, like paying lower.
Well, part of the problem here is that Michael's not in V3, right? In Aave, and that would we be having this discussion if he was in V3?
That's what kicked it all off, right?
Well, if he was in V3, he certainly wouldn't have a loan of this size. It would probably be even a fifth of this size.
It was just a few days ago he moved it from V3 to V2, which kicked off this whole firestorm.
Right. Yeah, that's probably his rioting against. There are very stringent parameters, right?
Yeah, it was like in the wake of him moving it, all of a sudden, like the rate on Aave was like 200% or something briefly for Curve lending.
Right. Yeah, and that's true. Well, I mean, that's it takes us actually a bigger. The problem is, and I've noticed that one of the comments, like where peer-to-peer exists lending, so why there isn't any market for Curve, whatever other token where users are willing to lend against Curve or large amounts? Well, I think part of it is because there is a fear that, well, how do you liquidate? And so Aave is correct in many aspects. Like, well, how can I liquidate 20, 25 million or 50 million or 100 million, whatever you have to liquidate to protect lenders. I think probably Aave v3 has set maybe there shouldn't be a larger market for Curve larger than $10 million of Curve worth of Curve. Basically, worth of Curve collateral.
Well, it really should come down to like what people are willing to supply into the market, right? I mean, it should. If if there's demand for people to, you know, supply the 65 million
Right.
to Michael, look,
Right.
if the rates were higher, people would supply it, right? So if he came to an isolated market where he's actually having to pay market rates instead of being, so the problem is Michael's being subsidized by the rest of Aave V2,
Yes,
right?
but here's a problem though. You said USDC users are willing to take the risk, but in shared pool model, there isn't any difference between a USDC user willing to provide loan to Curve and a USDC user who's not willing to provide.
Yeah.
To provide. So that's why isolated lending markets has to exist. There's no way, or peer-to-peer, because then you can separate those two different USDC users. Because right now, or USDT in this case,
Yeah.
now USDT users are saying like, well, I don't want to lend to Curve, so Aave has to act on either have to find a middle way to balance these two users.
Yeah, it's so interesting. I see parallels between this and the Tornado Cash issues, where like if you deposit money in the Tornado Cash, you have to share the privacy set between all the depositors, right? And so like if you have a risk that comes in from like one, you know, North Korean who's depositing a large amount of money into it, then it screws up everything, right? And it's similar lines where the rest of the shared pool in Aave V2 just is not able to opt out of these markets, right? So I don't know.
I wanted to say just Aave V3 is also not really a solution for the problem that we're talking about here. Just because isolation mode in Aave, it works great, right? You can certainly essentially set caps on different pools. But the interest rate doesn't really get affected for the borrowing side of the USDC, right? Or USDT, whatever he might be borrowing. Yeah. So I mean, that's the biggest problem. And then the other thing is when you have an isolated mode or isolated pool in Aave V3, that does not isolate the risk. It only caps it, right? So the risk is still shared between all depositors. It's just about, you know, a certain amount. Unless I'm getting something incorrect there.
No, I believe that's it. So like at the end of the day, really for these riskier high risk assets, right, which are not like Bitcoin and Ethereum or some stable coins, right? The best thing to probably do is move them into these isolated markets where the risk that is there is just borne by the people supplying the debt in whatever asset they're supplying.
Yeah, that's what you want as a lender. As a borrower, you like having the widest pool possible.
Yeah, exactly. Because like in an isolated pool, there is no bad debt at the end of the day. Like the borrowers take on the bad debt, not the protocol, which I think is the issue, right? Because like if Michael were to default, then Aave could end up with a huge amount of bad debt, like on the protocol itself, that they would have to then sell Aave tokens to repay, to recapitalize the platform, if they even could, right? Like, that systemic risk like spreads pretty fast, and you would see a huge depression in the price of the Aave token in that point. So as people rush to get out before the deleveraging happened and recapitalization. Yeah, pretty crazy stuff.
Do we have a confirmed action on what Aave is going to do? Just because I've heard split decisions from different team members.
So the Gauntlet team recommended that the pool be frozen, and frozen is not like paused, so it'll still work. It's just that no more CRV will be able to be supplied. Hold on a second. Gauntlet actually, let me pull this up because.
Also, I saw that Mark Zeller wrote that they will not support any proposal that they feel is rushed, because they think that the situation is being way overblown. That there's not really actual risk for Aave as far as they are saying. Considering the letter that was
as far as I'm concerned, like that's the end of the story. Like if Mark Zeller is chill, like let's move on.
Yeah, but I've also seen the 3D. I think he's also a part of the Aave team. He was saying the opposite, so I think they are split on it. I don't think that and I think Mark Zeller would actually agree to this. I don't think he has like the commanding voice on Aave. I think he very much likes that everyone has their own opinions, and
Fair.
I think that people are.
Yeah, I was not trying to like dub him God King of Aave. I just think that like if anyone has like a vested interest in making sure Aave doesn't get punched in the face, it's him.
Yes.
Yeah, so I can just read it to you if you want. The ending of what he said there. He said, "We would like to clearly state that we will vote no to any rushed plan that just reacts to social media chatter."
Yeah, which is us, to be clear.
And if
We're the
they're not,
reply guys that
You're
caused
saying it's like it's a bad thing.
and honestly, if they're not forcing the repayment, right, because they're not enforcing liquidation here in this scenario, what's the harm in leaving the Curve market open? I don't really understand. You already have 20-something% of the supply of Curve inside of the market, right, or something ridiculous like that. I don't think anyone's going to come in with any bigger loans than Mitch. What is the benefit to turning it off?
Okay, here's my idea. All right, you guys write this down. So we get enough Curve in Aave that's actually the whole market, and then we just vote lock all the Curve, and so it stays in Aave, and then we can just like trade the claims around, and we all walk away.
But getting to the question of what's the harm, like social media, like people are like this like crazy like tech amplified mob, but it has real world impacts. Like we're seeing the same thing. Like they've moved on to Tether, so it's like amazing to me to watch this play out in real time, because literally like the Curve pool for 3 pool is now 70% Tether, and people wonder, like the day before they're complaining Mitch has a amazing mansion, and the next day they give Curve $1 billion in trading fees. It's like, or not in trading fees.
So you can't hold two positions. So either Michael is a genius and he has one of the largest USDT shorts in DeFi, or Curve is going to suffer because the 3 pool is going to get completely imbalanced and Tether's going to be
right.
Right.
He's been making this bet. Like he's making this bet for years, and it's always paid off for him. And he keeps upgrading his house. And then Twitter goes on and complains. And
then Tether goes to zero. Tether goes to zero. He closes his short for like pennies on the dollar.
So hold on, before we like move on to the 3 pool story, which is good. Like Garrett, I just like want to like hammer home your point about social media like really having real world consequences, because like we can talk about the things that are happening in our industry and pretend that they're real world consequences, but like this is bigger than us. And like the best example we all just saw 3 months ago, it was Silicon Valley Bank. Like perhaps like one of like the most interesting dynamic like lone energetic pieces left of our economy went down because like Elon and his friends got like spooked, texted each other, and pulled their money out. Like this is the world we're now in.
Yeah. It's interesting. I think there's more to be said about fractional banking there than anything, I think, but which is, by the way, a complete scam. But yeah, no, it's
yeah, I think that is true.
Bring it. Let's talk about the big issues.
Well, yeah, but Tencent, feel free to go into it, but I do think that there's like an isolated point to be made about like what social media is doing to our behavior.
Yeah, absolutely. You cannot really rule out the fact that this is all engineered, and a story like this snowballs simply because it benefits a lot of users. There's a way to make money, but you have to participate. You have to stake something like with money. You have to do something. Stake your reputation by tweeting, yeah, there's a panic. Yeah, panic all. And I really like actually Michael's. At one point he deposited 1 Curve. Where was that, by the way? Just 1 Curve. Have you seen that?
Yeah, I saw someone speculating, just testing to see if it was still available to deposit.
Yeah, probably is like, which is great. It's not 100, just 1 Curve. I think that's also fun in it. It's basically like, hey, I'm there, and I think it just. But yeah, it's interesting. But you cannot rule out. I'm not saying conspiracy, but definitely this is engineered.
Well, we're going to talk about conspiracies a little bit later, but let's talk about this USDT imbalance, we can call it. So currently, I'm looking at the Dune dashboard. The composition of USDT is 73.3. This is important because it means that it's gone out of its Uniswap range, which is the big issue. So typically, USDT is in this like Uniswap range that is pretty tight. It has a ton of liquidity. Once it moves out of there, then the Uniswap range only provides about 8 or 20% of the liquidity that it did before. And the 3 pool starts to get imbalanced more and more. And so there's no reason why the 3 pool is actually being imbalanced. The last time it was this imbalanced was FTX, and then the Celsius drama as well too.
Wait, can you scroll down to the graph?
Did it not get to the 73.3 mark at the USDC DPEG?
Yeah, that's what I was. Yeah,
Oh.
Yeah, I'm looking.
You and I think the same.
Yeah.
So I'm just looking for a chart for that. I had one yesterday, but we'll keep going on it. I'm gonna look for that while you guys go.
Yeah, no worries. No, I think I think what the difference with the USDC DPEG was that, correct me if I'm wrong, but the 3 pool was filling up with USDC, and like the behavior we always see is like the riskier asset is what fills the pool because like people are trading out of it. And so like the implication of this 73.3% is that like people are afraid of holding Tether and trading out of it. And I don't know, like as probably the newest person to crypto here, like is this implying that people are leaving crypto or they're just leaving Tether?
Just leaving Tether. I mean, they could be leaving crypto. It depends on whether the USDC market cap is also going down as well too. Because if they both are, then it just means that the redemptions in Tether are happening faster.
I'm gonna share in the private chat. I'm not sure how to. It's actually a very nice like a dashboard that tracks liquidity for USDT from Warden Finance. It's interesting to look at the liquidity. Look at the slippage as well, like slippage on USDT, and you could see.
Can you make that picture bigger? Because that was the one that Dan Smith posted actually. If this one has that as well too, we can see the liquidity of
if
the
you
USDT.
Scroll down all the way down, you could see that PairSwap. They simulate PairSwap trades and the price impact at each level.
Yeah, the slippage.
Exactly. Slippage. Exactly. Slippage. It's above the chart. Yes. Yeah.
I'm left curve. Forgive me.
Yeah. Well, you're on the curve. That's what matters. Yeah. So Aham, can you just like tell us what we're looking at for those of us who are dumber than Garrett?
I think we're looking at if people exiting the impact of the price down, basically the downward pressure on USDT.
You need to flip the chart. Can you go flip the arrows? Because it's backwards actually. We're doing USDT. Now we're doing USDC. So this is
you want to buy? Okay. All right. Cool. Yeah. If you yes. So
it doesn't matter. It's the same.
I think it was correct the other way actually. But
no. This is from USDC to USDT. So if you're swap, it needs to go the other way, doesn't it?
Yeah, exactly. Yeah, because now you're buying. Right. Yeah. It doesn't. I don't think it matters exactly for the. But yes, that basically we're looking at 1% downward pressure on USDT if you trade around $10 million, right? 10 million USDT in this case. Now, honestly, this doesn't really mean anything because you can always redeem. I mean, assuming as the redemption mechanism works, this is not a problem. It will probably create some issues, maybe a little bit of issues on Ethereum, but it can be arbed like right away if the redemption mechanism works. So I don't really see any, and we haven't heard anything about the redemption mechanism, right? I haven't heard anything. It's basically just like how liquidity is positioned in, which is irrelevant, to be honest. It doesn't really mean anything. This is surprisingly, this is helping, surely helping Michael, because he's borrowing USDT. Yeah, he's making his liability less. But yeah, I honestly don't see any big issues here as long as the redemption mechanism stops working or anything, and that's going to be disastrous. Yes, but yeah. So honestly, that's my very, very narrow view on this.
Yeah, I do think that this is one of those things where if you're like new to the industry and like you know enough to know what's going on, like this is a very scary situation because it looks like the dam is trying to break and the only thing holding it back is this like one little redemption mechanism. But if like you understand how this industry actually works, like you realize that one little redemption mechanism is like the keystone that keeps us all together and has like for decades. So I don't know, like the only conversation I see from like the smartest people and the biggest traders I know, not financial advice, don't do this, I'm not doing this, to be clear, is like, I hope the 3 pool continues to fill up with Tether, because like I'm waiting to pounce on that ARB. And you know, like again, don't do that. That's a very risky move, but like I think it just reflects on how like the people who've taken the licks more over and over again are, you know, interpreting the situation.
Yeah, further down the not financial advice rabbit hole, I think it's worth mentioning the anecdotal FDI indicator, which people have been speculating for some time that large dumps of Tether into the 3 pool essentially presages a massive drop in price. So like it did in this case. So again, not financial advice. Nothing on here is financial advice, but FDI indicator remains undefeated.
Yeah. Or maybe the theory itself is causing it.
It may have in this case, right? Because it was like Dan Smith and I and Fiddy were talking about this at like 40%, and then look what happened.
So, got it. It's Garrett just admitted that this is all his fault.
It's our whole social media point. Like we are the change we want to see in this world.
Yeah, we moved the chains of the blockchains. But I honestly, I think that USDT has a much, I don't know how it's perceived in the US maybe, but I think that outside the US, I'm not sure that people understand just how much of a Lindy effect USDT has. In many ways, it really is the preferred stablecoin, especially after what happened with the USDC DPEG a few months ago. So, you know, I think that there is so much actual, among the common people, most people, I don't think they feel that Tether is going anywhere, and it's going to take a lot more than that to change their mind.
Yes, and I agree. Also, outside of the US, I do see Tether being kind of the go-to for like at least the people I speak to. And I think also USDC's reputation has been greatly hurt by the DPEG, and particularly because when people were thinking about USDC, they were referencing, look at how safe we are. We have 3 US banks behind us, right? And, you know, US banks typically, you know, well, not typically really, but, you know, they're safer than other banks, and, you know, they're seen as more transparent. But then, you know, now Signature's gone, Silverbank is gone. What was the other one that went? What was crypto?
They're not gone.
They're
all just
it's like Crossover or something. Well, Crossover hasn't gone yet, but there's a few.
No, there was Signature and Silvergate and another one.
And there was one more.
Republic, whatever.
There's a few banks left.
Yeah.
No, that one's just a TradFi bank that went under.
Okay.
Republic went down. SVU went down.
Listen, they're all still here. They only lost their brand names. Everything is just part of JP Morgan now.
Exactly.
Real talk.
Exactly.
So let's talk about some other interesting news. Do you want to talk about conspiracy theories or launches first?
Let's do Eigenlayer real quick.
Okay, so kudos to Eigenlayer, finally coming out. They launched their, I guess, MVP yesterday, if you want to call it that. And on mainnet, yeah. So within a few seconds, they received around 9,500 ETH, about $17 million, immediately hitting the cap. And those ETH will go to help with the first rollout of the restaking.
Yeah, I mean, we can be very brief about this. This is just congratulations to Eigenlayer and Sriram, and this is a request for Sriram to come back and tell us more about what's coming. But otherwise, just another successful product launch. And to be clear, this money that's going in is not like given to Eigenlayer. It is like staked with Eigenlayer. So, you know, people aren't donating their assets. They can get them back. And also, just like one final clarification, they actually had separate caps for the different LSDs and for like solo operators. So the staked ETH cap maxed out like faster than they launched the contract. But at least as of like a couple hours yesterday, there was still some room for RETH and solo stakers to move over. So not financial advice, especially on like new products that don't even have functionality yet.
Or a token.
What?
Or token.
Yeah, no token. We know. I mean, like, just move on, Sam. Move on. Next story.
Could be bullish though.
Well,
be responsible, folks. Be responsible.
Not financial advice. Not anything advice.
Wisely.
No advice.
In other news, you know, we talked about now to actually get to real conspiracy theories. So we talked about the Prometheum storyline at length yesterday with Alex Golubitsky, our resident in-house legal eagle. And we kind of discussed it in a way where we kind of gave them the benefit of the doubt, where here's this, company that had gone through, sure, they might be China connected. Sure, their testimony was a little bit weird, but it can't be all that bad, right? So after the testimony came out, a lot of people on crypto Twitter were like, what is actually going on here? And Matt Walsh did some excellent investigative work where he went out and kind of put together all the information on these Prometheum guys. So essentially, like, Prometheum is this, let me scroll down a little bit. So it's been around since 2017, right? And they've been trying to launch their own L1 with no luck. So they've been selling tokens. They've sold some tokens to that CCP China connected company. The pitch book has them raising like $50 million, right? They then paid $1.5 million in excess to this New Jersey-based outfit called Network One Financial Securities. Network One Financial Securities is a brokerage firm, right? And unfortunately, they don't have a great regulatory track record. They have over 20 events which they've been sanctioned for. And additionally, Network One also has Chinese connections as well, too. And like we said yesterday, the Promethean guys are just a bunch of lawyers. It's like a family of lawyers.
Yeah, wait, hold on. Just
Okay.
this is the part for me, which is like, what the fuck is happening? Because like the whole conversation yesterday was like, okay, giving them the benefit of the doubt. It's like, it's not a bad bet to like put your money behind a bunch of like ex-SEC and like financial regulation experts to build an exchange.
Yes.
Like, we can have conversations about that, but it's like reasonable.
But who is that?
Every single expert is made up?
Yes.
Like, what?
So who is Network One Financial, right? A shady broker with Chinese affiliated firm with a horrible compliance track record, right? So it gets even better. Network One was responsible. They were the broker behind the Long Island iced tea. Actually, I've spoken with the people there. Like, I think they just got embroiled with the whole name thing, but they tried to do like a reverse IPO to get this like blockchain thing. They took Long Island iced tea, rebranded it, had like a 20x on the first day for the stock, and then it went back to zero again. So they were a part of that. They were also part of another kind of scammy project called Longfin. And so
Longfin is the same one, actually. I think he says it right there, but Longfin is like the same project, just rebranded. The whole thing is ridiculous.
Good God.
Charged with fraud. Longfin was also charged with fraud as well too. So they were like, yeah, go ahead.
It's really annoying that, like you said, we kind of gave him the benefit of the doubt. I don't really feel I gave them that much because it all seemed so suspicious in advance. But I think it shows like the paradox between the facade and the masks of people, TradFi people, as if it's all legit and yeah, we work for the SEC and we're good guys and trust your money with us. And we have these two guys here which are working from their homes or their offices, which are really trying to change finance, and they're actually the good guys that like at least I'm not saying like go put your money in Silo or any other project without doing your research or whatever, but I am saying that at least for the normal person, I think it's a much safer bet, and again it's still a bet, to put your money in a service or a DApp with builders like the ones at Silo or at so many of the other teams in DeFi, which may be anons, but at least some of them, but are honest and building and trying to make a difference in a good way. And these guys are supposed to be like the educated and the high society guys. They're acting like the worst of the NFT influencers that the mainstream media likes to mock at. So I just want to say that honestly, guys, keep doing what you do, and I believe that the newer generations see you as a lot more reliable than the other side of it, people like Prometheus and whatever. I definitely feel that way. I wish you a lot of luck. And again, for sure, I'm not saying it is financial advice. I'm just saying that don't believe the masks and the shadow. Right. Look at the real thing. Study it for yourself. do as best as you can, and don't feel that your money is safe just because someone has a past experience with the SEC or whatever.
Absolutely.
So
And,
you go ahead, guys.
I was just going to say that the website looks like brings to me like some memories from the ICO era, 2016, 2017.
It's actually
they have
exactly
a website,
what it is.
right?
Because
they have a,
We're from the 2017 era when they raised all the money, right? But here's the thing, like, let's just get a temperature check in the room, right? Obviously, they pre-coordinated their answers with the Democratic side, right? That was clear because they were being asked about stable coins and a whole bunch of other like non-issues that were not really like part of their company's focus. And they had essentially like well-researched, preconceived answers that they were able to recite for the Democratic questions. And so it's just a little bit weird that these people are being trotted out as the shining example of what it is to come in and register when, one, they don't even have an operating business. Two, they have these like deep China connections. And three, it's just a revolving door of lawyers in and out of this exchange. It's not even really like tech people. It's just a bunch of like SEC connected people that used to work at the SEC, work here now, used to work at FINRA, work there now. And, like I was just pulling up a page where like 2 of the 3 Kaplans went to a now unaccredited, a law school, which is now unaccredited. It lost its license it lost its accreditation rating. And these people are being held up as security experts versus the exceptional legal team, which is at Coinbase, the exceptional legal team, which at like Coin Center or some of the other, blockchain association people who, went to, great law schools, have had these storied careers, have been a part of these big cases. It just doesn't make a lot of sense.
So what's the temperature check?
I think it's definitely conspiracy theory.
I think it's definitely conspiracy theory. Yes.
Wait, sorry, not theory.
No,
conspiracy. Conspiracy.
It's a conspiracy hypothesis until it's proven to be a conspiracy theory through a preponderance of evidence.
Exactly.
Get off ChatGPT.
What are we saying? Conspiracy theories like it's controlled by China, or conspiracy theory the Democrats are feeding them questions? Because I think the second one is more than obvious.
Well, just that like there's something happening. There's something happening here where, like this unknown company comes out of nowhere and is all of a sudden being touted in front of Congress as like the optimal way to run a company when they have no business, they have no customers, they have no assets to trade.
Yeah. We've been through the list. Like, look, if you're asking if I think this is weird, yeah. If you're asking if I think something like doesn't smell right and like I would love more information, for sure. Do I think Matt Walsh is like a neutral, unbiased reporter? No. Do I think that that based on the information we say, like it is responsible or likely that like there's some sort of coordination between the Biden administration, the Democrats in Congress, and the Chinese Communist Party to do something?
We already know that. No. Yeah, we already know that. We already know that.
Okay, then I disagree, and like so strongly disagree that.
Our favorite topic, folks. Our favorite topic, and the audience.
Nothing's real. The Nazis have infiltrated everything.
We're not talking about Nazis.
Everything's about to go to shit.
Talking about
the other way around. It's the other way around.
Just to wrap up, unfortunately, Hashflow was hacked yesterday for a little over $600,000. Last I saw, due to a malicious approval exploit. OpenSea Pro is integrating SudoSwap v2. That's pretty cool.
Yeah, like I love it. See the centralized integration with the DeFi stuff. Love it, especially like in the NFT world, which you'd think like is harder to bridge.
And DopeX is introducing 0-day expiry options for the degens out there.
No.
Telegram.
Before we go,
they're building a Telegram bot that you're gonna be able to play this whole game through the Telegram. I think it was great.
Yeah. So to be clear, the scalps are like a couple months old, but what's new here is that you can trade scalps through Telegram, which is like the most degenerate thing I've ever heard.
Yeah,
before we
I think.
Before we go, Silo team, you did a really good job of not shilling yourselves too much, but quickly, could you take a minute or two to shill Silo Finance and what you're up to?
Yeah, absolutely. I mean, Silo Finance, risk isolated markets. Happy to be on here again. Well, not here in particular, but hi Solomon. Nice to see you again. And yeah, we've been really working hard. Right now, we just shipped Curve LP token markets. At Silo, you can now deposit your Curve LP tokens. The contracts stake that in Convex for you, and you can borrow against them either Xi, which is our stablecoin, or Ethereum. And we started with 3 pilot markets, but the infrastructure that we built around them basically allows us to list anything, mostly so long as there is underlying price providers and it's not one of the weird pools, because Curve has actually like very multiple types of pools. It's actually very many different, it's like 4 or 5 different protocols in one. But yeah, we're very excited. And if anyone wants to leverage up their LP tokens, we have ETH staked ETH right now, LUSD3 Curve, and the Frax BP pool. But if you have just a token that you're interested, you can come into the Discord and talk to us. We're always there. And I'll look into the feasibility of, is there a price provider for this and whatnot, and happy to list any and all LP tokens for teams and users. So
what chains are you on today, and what chains are you planning on being on in the next foreseeable future?
We're currently on Ethereum and Arbitrum. We don't have a clear chain, next chain, but we do want to be on multiple chains after our V2 release.
We're working on V2, so and V2 is going to be everywhere. And
V2
one thing. V2, I can tell you like the core aspect of it. There is a V silo which is modeled after V curve, and so users will build. You could build deep lending markets using the V silo model by incentivizing any type of liquidity. So technically speaking, you would be able to create Curve USDT market. And then using the V silo, you would use that through voting and whatever to concentrate liquidity on those markets and create that connection between the lender and borrower. Back to the Curve LP markets that we have launched recently. We're considering right now having markets for the Curve USD as well, meaning if you've deposited USDC Curve USD, you bring that LP token, you could borrow against it to leverage while farming all the Curve Convex rewards as well. So we're looking into this. It's a new type of pool, but it's not actually a new type of pool, but we're looking into it. The trick is to read the price of Curve USD in a secure manner, because right now there's a custom oracle basically for it.
And it's worth noting that we don't take any fees on your rewards, and all your rewards are actually claimable directly on Convex's UI. There's a little silo tab. And yeah, so, there's really no reason for you not to deposit inside of the market. There's no hidden fees or anything like that we take from you. So
good chill. Thank you. Thanks for joining.
Thank you for coming on.
Thank you guys so much.
Yes.
Appreciate it. Thank you so much.
Well, until the tide returns, we'll be back tomorrow, and we promise that we're not going to change our names to like Curve News Daily.
Yeah, no, we're going to change our name to Michael News Daily.
Michael News Daily. There we go.
We should start a project. Let's just make products only for Michael to use.
Exactly. Well, we'll be back tomorrow. Thank you guys for coming.
I'm gonna have product market fit, to be honest.
Yeah. Well, honestly, like Michael pays fees, so I'm down.
Thank you to the Silo team, and we'll see you again tomorrow. Bye, guys.
See you, squids.
Right.